Thank you, Michael, and welcome everybody. As Michael said, we really appreciate you taking the time out of your day to join us. And I hope that you can understand my strange foreign accent. As you can tell, I'm English. But I travel around the world every day, and for the last decade, I've been blogging every single day and writing about the future of banking at thefinancer.com. And recently produced a book called Digital Bank that's been doing rather well. Mainly, I think, because it has the title Digital, but in particular because it's talking about the fundamental change that's taking place in banking because of the consumer technologies of today. Now, this has been happening for quite some time, but the thesis of the book, the tenet of the book, is that we created an industry in the last century for the physical distribution of paper in a localized network focused upon the branch with buildings and humans. And now we're seeing a major change as we move towards the digital distribution of data in a globalized network, the internet, that deals with value exchange through file transfers rather than through physical transfers. And there are two technologies in particular that are transformational. The first is mobile. The second, you may be surprised to hear, is the blockchain. And the reason why these two technologies are massively transformational in financial services is that mobile allows everybody to be included in the network. And by everybody, I mean the over 7 billion people who live on this planet. There's a lot of discussion right now amongst regulators, amongst charities about financial inclusion. And the key driver behind financial inclusion is that mobile allows anybody, anywhere, to connect with anybody else, anywhere else, in real time. As soon as you can do that, you can transfer value in real time to anybody on the planet. And the problem we've had historically is that to do that is high cost and slow, because you do it through the banking network across borders, through SWIFT or other infrastructures, Visa, MasterCard, and it takes time. Now, using the blockchain Bitcoin technologies, and this is a big discussion area amongst all the transaction banking people, we can do this in real time for almost free. By way of example, in November last year, an $86 million payment was made on a Sunday morning at 11:46 in real time. It transferred at 11:46 on a Sunday morning for almost nothing because it went through the Bitcoin blockchain technology. So these two technologies combined allow anybody on this planet to transfer money or any other form of value to anybody else on this planet in real time for almost nothing. That's the big technology driver that's actually challenging the banking business model at its core, because our model is built around physical distribution of paper in a localized network through buildings and humans in the last century. This change is saying we can actually transfer anything to anybody anywhere through software and servers. To do that, you save billions of dollars because you get rid of the high cost of the infrastructure of the physical network. You replace it with a digital network at low cost. This is the reason why we're seeing billions of dollars from venture capitalists going into fintech startups. We've seen quite a few of these fintech startups like Lending Club, Prosper, Cabbage, Square, Stripe, becoming unicorns. They're over $1 billion valuations for these new fintech companies because they're succeeding where we're failing in the old world. They're attacking every piece of financial services with software and servers that connect those who have money with those who need money. Get rid of the buildings, the humans, the bricks and mortar, and it's far more efficient. Use the mobile network, use the blockchain technologies to do this in real time for almost free. It's a massive challenge for an incumbent company to respond to that change because we have to deal with a massive change of old physical infrastructure to compete in this new space. But the focus of today's webinar is mass segmentation, dealing with a one-to-one focus. And how can you achieve that when you've got this massive change that has to deal with both regulatory and innovation challenges at the same time as realizing that everybody is connected one-to-one? And that's the key thing. Everybody is connected one-to-one. So let's look very quickly at the business model of banking. Every bank has three pieces to its organizational structure. It has a back office that innovates through delivering great administration and products and services. It has a middle office that focuses upon operational excellence, getting things right first time, every time, connecting the back office with the front office. The front office is all about customer relationship management and customer intimacy and a great customer experience. Now, we're seeing that business model moving through some massive change because we're seeing banks that traditionally have delivered all of that structure across all the lines of business globally, now having to deal with regulations like the Volcker Rule, the Dodd-Frank change, and in Europe, the Banking Reform Act, the Banking Union, saying, take out your investment banking operations. They're no longer viable. You can't have that. It's got to be separated from your retail and commercial banking. You cannot be too big to fail because it affects consumers. But equally, technologically, we're seeing massive the middle office being changed to ensure that everything happens in real time. So there's no batch overnight updates. Whatever I'm looking at is now, thanks to the APIs that are being delivered by the disintermediators, but also the intermediators like the banks themselves. And then the back office analytics through the cloud are allowing a one-to-one personalized experience in real time. We never had that before. And the fact we never had that before is part of the reason why we're seeing all these fintech startups being capable of using all those technologies to say we can do this in a very narrow way, far smarter than those old guys who do it through physical buildings and through humans. We can get this technology to leverage that one-to-one relationship in a very narrow way by just dealing with the back office products of consumer credit, consumer loans, mortgages, small business loans, front office relationship experiences. In fact, what we're really seeing is the unbundling of banking through fintech. We're seeing lots of small companies focusing very clearly on a unique direct space of narrow finance where they can do it better through software and servers than anybody could do before through buildings and humans on a one-to-one basis, connecting those who have money with those who need money. That's the reason why when Jamie Dimon sent out his April newsletter to shareholders, he said, my biggest concern is all these fintech startups because they're eating our lunch. They're destroying our business. They're aiming to reinvent the financial system into something that's completely different. In fact, the real reason he's worried is that we're stuck in old systems. Our old systems date back hundreds of years. The original branch model goes back 500 years of dealing with people face to face through the branch network. And our problem for most developed economies is that we then cemented that structure in place with mainframes in the 1960s, 70s, as a ledger system for the branch. We built channels on top of that ledger system, like ATMs, like call centers, through the next few decades. And when we got to the stage of dealing with internet banking, we were just really saying this is a transaction statement that reflects our old 1960s, 70s mainframe back office system, showing you our debits and credits. And in fact, when we got to mobile, we took the big screen to the small screen, still focused upon an old ledger-based style system. What's intriguing now is that we're seeing all those new agile companies saying you can't deal with things that way anymore because you guys are stuck in your legacy. You're actually hampered by your heritage. You're really cemented in the past, and if you stay cemented in the past, you will drown. What you need to do is stop talking about channels and multi-channel and omni-channel, because all you're doing there is saying all that rubbish at the back that's legacy, we're going to strap together through some form of front-end software to make it look pretty. And all that does is stips lipstick on the pig. It doesn't look pretty. It looks awful. It doesn't give a consistent experience. It is just a dreadful, siloed, structured experience that everybody can see doesn't work. It needs to be a digital core that's consistent across the enterprise for both employees and customers. Now, the real reason I go through all that logic, and I've done it very quickly, is to say, I believe that any bank that has a system that hasn't been updated in the last 15 years needs to blow up their back office. They've got to get rid of those core systems. They've got to reinvent the bank to be fit for the digital age. Otherwise, it just looks like it's fragmented and old and batch, and it can't deal with real-time and free and all the things that today's digital customers demand on a one-to-one basis. It needs a real-time digital core platform at the basis of the bank, the foundation of the bank, to first of all deliver a consistent augmented digital experience on a one-to-one basis for the customer, but equally to avoid having some cyber criminal attacking the bank and getting through your walls. It's very easy to get through your defenses if you are structured in silos through legacies. It's much harder when you are in real time all the time. So that's my quick introduction to today's webinar. And the mass segmentation of the piece to me, the real criticality of this is that if you can't deal with me on a one-to-one basis in real time through my apps by delivering me immediate analytics of my needs and knowledge of my experiences, then I'm going to go somewhere else.